Hey everyone, welcome back to your weekly market outlook. This is for the 10th of February 2025. Let's get started with what has happened last week. I think there's a lot to talk about. Obviously, number one, we have the Bank of England cutting interest rates by 25 basis points, and they got full votes on the cut. Comments, though, coming back from them was a little bit more on the hawkish side. They did mention that if inflation still persists, they're more than willing to continue back to hiking interest rates if needs be. Okay, the other thing is obviously Trump's tariffs program, obviously back and forth there between Mexico and Canada, and obviously the tariff that was being imposed right now is about 25% on steel products. That's particularly aimed for the Eurozone. Obviously, that has brought a lot of chaos into the market. I think the market is anticipating that tariff to be in place either Tuesday or Wednesday this week. That would be the main focus for this week's thoughts. But last week, Friday, we have the employment numbers. The unemployment rate that fell down from 4.1% to 4%. That was a huge improvement. However, market initial reaction was that the NFP was a little bit on the lower side. Two things to talk about here. The previous month's data, which was already high, which was 100,000 above consensus, that was revised up now at 307,000 for December number. So December number is now revised up to 307, and then for January's number we're looking at 143,000. The initial market reaction was obviously for a weaker US dollar. We saw that spike on the euro, we saw that spike on the pound USD, we saw a spike on pretty much every other thing that has to do with the US dollar. We saw the initial weaker US dollar, but then the unemployment rate came in. It is at 4%. The average hourly earnings has also increased as well. And obviously this is more or less a story where the employment or the labor market in the US, it's strong, and right now, it could be a thought that the FOMC would say this is probably at maximum employment at this point in time. So it does reverse a lot of the initial movement because of that lower NFP numbers. By the overall data that we have here, we do see numbers being good for the labor market in the US there. All right, so up next for this week, we're going to be focusing on the US inflation number here. Again, year-on-year inflation is expected to remain stable at 2.9%. Core inflation is also expected to remain stable. In terms of growth here, probably on the core CPI, we're looking at a much stronger growth from 0.2% per month to 0.3%. In terms of the CPI numbers, probably going to be looking at a stable growth here from 0.4 to 0.3, but overall headline inflation is targeted at 2.9% in terms of consensus. So it leaves us open for a lot of surprises in the market. I don't think anyone has actually priced in for an inflation that could be higher at this point in time, and data does point to possibility for inflation to come in a little bit higher. It might actually hit 3%, or it might even go higher than 3%, and that would kind of put everything, or it will send the market into a little bit of a chaos there. On top of Trump's tariffs program, that would actually send the US dollar, if we do have that higher than expected inflation number from the US economy there. PPI numbers expected to be released on Thursday in the US. That will be Friday in Australia. We are currently looking at Australian time here. Obviously the CPI is going to be released on Wednesday, but it will be Thursday early morning in Australia. PPI numbers here expected to remain stable in terms of growth there, but the core PPI, this is where we need to be a little bit of we need to show a little bit of a concern there. From 0% growth last month to 0.3% growth expected this month. And obviously to wrap up the week, we have the US retail sales number and retail sales forecast here is for 0% growth last month. All right, let's take a look at the Aussie USD. For the Aussie USD, we still remain in that downtrend. We did saw that strong bounce last week from 61 cents. I believe the low was 60.87, but immediately bounces back up. That was on the back of that Monday's drop on the Canada and Mexico tariff announcement before everyone just kind of renegotiates with Trump. Obviously, Trump is looking at all these tariff issues more as a business tool rather than a proper fiscal policy at this point in time. But yeah, nevertheless, Friday's movement in terms of the post NFP numbers, we did see that sell off on the Aussie USD, and the market does open a little bit lower here. Immediate support is going to be at 62 cents, and also for key support, we're still going to be looking at 61 cents. The condition here for the Aussie USD is obviously this is technically still in a downtrend. We just got rejected off the Ichimoku cloud. We still have that bearish order block up above there, and 62 cents as our flat horizontal support for the Aussie USD. Euro USD, very similar situation here. We also just got rejected from the Ichimoku cloud. We did break that resistance trend line about 2-3 weeks ago, and at that point in time we were saying, okay, if it does break that, we might be looking at 1.05. Any rejection from 1.05, that should keep a lid on the Euro USD, and that has been the story for the Euro USD at this point in time. We are still going to be projecting a move towards 1.02 this week. We're going to be looking at that move towards 1.02, but eventually we're still looking at the same target as last week's outlook, which is going to be at 1.01, and then eventually heading towards parity at $1 here on the Euro USD. Next up is the Pound USD. This one here is a little bit more on the choppy side, a lot more sideways movement, I would say, because this is currently trapped between a bearish order block as well as a bullish order block, which is going to be our support level, which is at 1.23 to 1.2350 on the Pound USD. On the flip side, up top we have 1.25 to 1.2550 as our major resistance, and at time of recording, obviously price does gap down a little bit lower here, but price is still above 1.2350. We basically need to clear off 1.23 for sterling to continue to push to the downside. It is still technically in a downtrend. We're still below the Ichimoku cloud at this point in time. However, in terms of whether or not the sterling itself is actually weak compared to the euro or the Aussie, for example, the sterling is actually a little bit more on the stable side. This is the reason why we're currently looking at price just being really stagnant there between 1.23 and 1.23 and 1.25 on the sterling here. The stochastics does point to more room should there be a break below 1.23 on the sterling here. All right, last we have the dollar Japanese yen. This one here very chaotic. We lost 154.50. We lost 154 last week. We saw that very sharp drop on the dollar yen here. This is obviously on the back of the concerns about the tariffs there. Obviously people are going to be looking for safe haven currencies, and yen is definitely going to benefit out of that. And also the wages number coming up from Japan, that points to a higher number, and that leads to the market assuming that the Bank of Japan is likely going to continue hiking interest rates. There's still potentially 2 more hikes from the Bank of Japan this year, ultimately putting the interest rate to 1% for Japan. And that's basically has been the story on the dollar Japanese yen. That's basically what's driving the dollar Japanese yen. We are now below 152. We still have a little bit of a support. Immediate support is going to come in at 150. But if we take a look at where the positioning is around 150, I think we should be a lot more focused on where the bullish order block is currently located. That would be between 148 to 150. That's the area of concern for the dollar Japanese yen. The other thing to note is the dollar Japanese yen on the daily time frame has transitioned below the Ichimoku cloud. So in terms of is there a story or is there a reason for a strong bullish movement on the dollar Japanese yen at this point in time from a technical perspective? It's kind of dash at this point in time. So looking all the way back the past 6 months in terms of the price movement here, ever since that July chaos from Bank of Japan, We just saw that recovery above 150, and now if we take a look at the movement, basically we're just going back and forth between 160 and 150. If we take a look at the range here on the Dow-Japanese Yen, so I expect this kind of range to continue to be the story here for the Dow-Japanese Yen, at least for the next 2 months here on the Dow-Japanese Yen. So very hard to make a call for a buy on this one here. I think carry traders are pretty much on the sideline at this point in time. And looking at how the drop was last week, I think there might actually be more room to go here. In terms of correction, where we are right now, it is at about 78.6% from the rise in the month of December. But it doesn't give us any significant reason or any bullish indication that yes, the Dow-Japanese Yen might recover. So this one here, I think there's a lot more caution to be put on the Dow-Japanese Yen. We are currently looking at immediate resistance at 152. Above that, obviously straight up to 154. Immediate support for this one is between 148 to 150, where our bullish order block is currently located. That's where we anticipate more buyers could potentially come in for the Dow-Japanese Yen. All right, so with that, good luck with your trades for this week, and I'll see you soon.